Welcome back. Well, let's focus on EID Parry. We have with us Mr. Muthiah Murugappan, the whole-time director and CEO of the company. Hi, sir. Good morning, and thanks a lot for joining in. Well, let's focus on a couple of aspects of your business, and let's start off with the distillery business. You know, you've gone ahead and you've increased the capacity from, I think, 417 KLPD to around 500 KLPD. So for this year, what is the volume we should be looking at in litre terms? And what does it mean in terms of revenues? The last time I recall a few months ago, you were telling us that that number is likely to move up. And also as a contribution of the total pie, distillery will contribute more. So please tell us that, sir.
Very good morning, Nigel, and thank you for having me on the show. So the distillery segment was doing very well up until Q3. We were growing about 35% year on year. There was a policy change in Q3 wherein ethanol blending program, the diversion was pulled back, and subsequently our growth slowed, and we ended the year with about a 19% growth. The policy has still not moved back to the original policy framework, and given this, we will probably maintain the same or sort of slightly under growth trajectory going forward. In terms of capacities, we're a little bit above 500, sort of about 520, 530 KLPD right now. This will move up closer to 600 when another distillery is commissioned in Q2. So this is the kind of growth that we're expecting in the upcoming year.
Okay. All right, Muthiah, you want to give us it in litre terms? I think you were looking at doing something in excess of around 12 to 14 crore litres for the last year. What did you achieve in the past year, and what are you looking to achieve? And I think in revenue terms, it was around 800 crores. So we're saying you grow in high teens, you'll be in the vicinity of around 950 to 1,000 crores?
That's correct. And in terms of volume, we will be closer to 16.5 crore litres. Again, if there is a policy change, and we remain hopeful, this can move slightly above that.
And in margin terms, what will it be? It'll be in the same region that you have been delivering?
So we closed F24 with an EBITDA margin of about 12% on the distillery segment. I think we were on track to get to about 16-17% up until the policy change. We'll likely hold these margins going forward, and I think if the policy is reverted to, then there's perhaps a scope for margin improvement.
Okay, Muthiah, hi, good morning, and thanks for joining in. So that's on the distillery segment, but I want to talk a little more about the staples category in which you're trying to expand. And you have said that your aspiration is to capture more than 10% of the kitchen shelf in every household in South India. So tell us a little bit about that. What is the kind of investment that you're making here? When do you hope to get returns from it? And what is the potential that you see in this space?
So thanks, Sonia. So the staples category, we see it as a natural extension. We have branded sweeteners over the last 5 years, and we've had good success, but it's obviously a small component of the kitchen basket. We see staples as a natural extension, and also we see some of these categories, rice, dal, millets, all only sort of sub 20% branded. So there is a good headroom for growth, and there's a good headroom to leverage the equity of the brand. In terms of the strategy, we're starting with the straight. So, you know, it is the base level products which are going in, helping us build distribution at the retail as well as the wholesale level. There's obviously a synergy between the sweetener distribution that we already have. And I think once this base distribution is in place and has expanded, we will look at value-added, higher gross margin categories within the staples segment on the lines of, you know, roti mixes, dosa mixes, upma mixes, so on and so forth. So this is something you see once distribution is well established.
So can you tell me, in terms of the investment, how much investment are you going to make now over the next 1 to 2 years? And when do you expect to see a break even?
So from an investment perspective, this is largely, product development related, manpower related, and A&P spends. Overall sort of consumer business, the A&P spend last year was about 35 to 40 crores. This will grow by about 50 to 60% in F25. In terms of break even, I think it will take us some time until we build the critical mass from a staples perspective. If you look sort of slightly more medium term, we're aspiring to build a much larger consumer franchise than we already have. The sweetener franchise is about 550 crores. With staples coming in, that will aggressively grow. And I would say towards the end of the decade, we would like to build a substantially larger business with a late single-digit EBITDA percentage. That's what we are working towards.
So you've launched in Andhra Pradesh, Telangana and Karnataka as of now, right? What is...
as well as Tamil Nadu.
You plan to... In Tamil Nadu as well. Do you plan to expand geographically a lot more this year?
The focus will remain on the south.
Okay.
This is where our distribution, the focus will remain on the south for now.
And got that. Mr. Murugappan, hi, morning, Prashant here. Last time we spoke, you said the nutraceuticals business is under some strategic review. Could you give us a sense of, has that moved? Has that moved forward in terms of what you want to do with it?
So Prashant, I would still say under strategic review. We have wound down our operations in Chile, and some of the other segments. We are sort of subscale, so we still continuing to look at alliances and look at opportunities for value creation. So it is still under review. We'll obviously make intimations once we have a clearer path around that.
So, got that. So, across, on an overall basis, I mean, sugar, cogeneration, ethanol, everything combined, refinery, could you give us a sense of the total sort of earnings growth that we will see, top line growth that we will see in FY25, Mr. Murugappan, and also margins on an overall basis that we should expect?
So, Prashant, we don't give guidance, but let me give you a sort of picture going into F25 in terms of how we're seeing the business. If you look at the sugar and distillery segment, from a sugar perspective, climatic conditions are improving. So this augurs well for the business going forward. Last year, especially in the southern region, was plagued by deficient rainfall. This impacted recoveries and yields. With climatic conditions improving, the outcomes from a farm perspective and an operations perspective should improve. We're also going to start the year with about 9 million tons of sugar stock, and this is encouraging and gives some leeway to perhaps for the policymakers to perhaps consider exports as well as resume the diversion as per the original ethanol blending policy framework. So these, I would say, are the positives. The FRP also has been taken up by 8% this time, so that should have also encouraged cane planting. So I think we remain positive, but it's also pending how policy pans out. So this is from a sugar and distillery segment. I think we spoke about the growth path of the FMCG piece. Lastly, on the refinery as well, we've had a better operating year, and this is due to higher demand for whites, better cash premiums, and better spreads. We are hopeful that this momentum will hold, as there is still a bit of a supply crunch in the global market. It remains to be seen whether India permits exports. Then the sort of global balance situation will have to be looked at.
All right. What was your export quota for last year, and what is it this year?
There is no export quota, Nigel.
Right.
For.
Oh.
Yeah.
Okay, and on your total sales mix, I think you had some percentage of your sugar sales which gets a higher realization, right? So could you run us through what is the percentage that gets a high realization, and what is the difference?
So most of our sugar sales, Nigel, is focused on the retail segment and the institutional segment. So retail segment is around about 30%. That's what it's been for F23 and F24. We had some opportunistic trade sales in F24 when prices were good. F25, it's very likely that the retail segment will move north of 40%. In terms of realizations, we get a positive delta of about 2.5 rupees to 3 rupees compared to trade price, because our focus is on institutional and on retail.
Okay, all right. One final question from my end then. What about the stake in Coromandel? A few years ago, you all sold some stake. I need to ask you this, before we wind up. Any further plans or no plans at all? Just to reconfirm.
Yeah, no, Nigel, I think we've discussed this in past calls as well. There's no such discussion. The focus is on the operating business of EID Parry and ensuring that we sort of take our growth aspirations forward.
Okay. Just one final word on debt. You have a long-term debt of around 300 crores, short-term debt at almost 770 crores. Any plans to bring it down in the near term?
So Sonia, the long-term debt is largely due to the capex cycle of distillery expansion, and I think the capex cycle is largely concluded or will conclude in another quarter. So I think it's important that the distillery business picks up steam to address that. And in terms of the short-term debt, this is because of high inventories. The sugar season has just concluded. It's really working capital related. It will get paid down during the course of business operations.
All right, we will leave it there. Thank you very much, Mr. Murugappan, for joining us and running us through and giving us a real sense of how various businesses are looking like as we get into the thick of FY25 and beyond. That's EID Parry, 634 on the stock.